Olson is our marketing analyst this week. We talked with Frayne Thursday morning about wheat issues in Australia and Ukraine and why he believes corn, soybean, and wheat markets have met their highs. But as winter wheat seeding is wrapping up across the country with a good portion now emerging, we started by asking if he was concerned about growing conditions.
Yeah, that's something that the market's starting to take a little bit more focus on right now. The last crop conditions report we got was about 36% of the winter wheat crop was in good to excellent rating condition, compared to about 50% at this time last year. And I guess as you dig into the numbers, probably a more troubling statistic or troubling numbers is that we've got the soft red winter wheat crop that's really offsetting some of the more poor conditions that we have in the winter wheat country. So for example, based on Monday's report, the Nebraska winter wheat conditions were about 15% good to excellent. So the winter wheat crop is in much tougher condition than the soft red winter wheat crop, and those two are kind of balancing each other out. So even though there's a relatively poor correlation or relationship between winter wheat conditions at this time of the year and final yields, it is something that I know the markets are concerned about, and we need to keep looking at as we move through the winter months.
So you're saying there is time to bounce back, not panic mode yet?
Well, winter wheat is an amazing crop. I mean, it's very resilient and has a way to compensate, in particular in the spring when we start tillering and it comes out of dormancy. And so the weather conditions as we break dormancy will really be the determining factor as we move forward on kind of setting our base yield expectations.
Let's move overseas. Let's move into Ukraine, where we've heard both sides of whether or not that country is going to impose an export ban. What do you think ultimately happens there?
Yeah, that we've been getting very mixed signals whether the Ukrainian government is going to impose an export ban on wheat like they did a few years ago. In 2010, both Russia and then later on Ukraine and Kazakhstan imposed export bans on their wheat. And the interesting thing is this year in 2012 they actually have lower production than they did in 2010 when they put the export bans on. I think one of the things they learned in the process in 2010 was an export ban works pretty well to limit exports and to help soften domestic prices, but it also causes a lot of chaos and confusion in the international market because a lot of the contracts that are in place have act of God clauses, or essentially act of government clauses, that if an export ban is put in place, the contracts that are currently in existence are null and void. And so there were some international buyers in 2010 that were really left scrambling for not only future purchases but also to refill purchases they had on the books. And
so for that reason, you think maybe they don't shy to it, or they shy away from it, I guess?
I think there's some conflict going on internally now to say, well, we need to control kind of or try and mitigate some of the high prices we're seeing domestically for wheat and bread products in the Ukraine and Russian regions. But you know, the export ban didn't work the way we really had hoped longer term. So in my view, I think a more likely scenario would be an export tax, so that the existing contracts in place are still kept in place and are able to be executed, but it would really impact future sales as we move forward in time. So again, the market's trying to figure out, well, you know, what is the export opportunities for the U.S. grains into that region.
Then you look at Australia and they have dryness concerns there, but I know as we talked yesterday, you thought there may be some quality concerns as well.
Well, I think that is also a developing story. The current expectation is that the Australian crop is going to be down fairly significantly from last year. Last year they produced between 29 and 30 million metric ton. The current forecasts that have USDA's for about 21 million metric ton coming out of the Australian market. The other thing that's starting now to develop is, yeah, most of the major producing regions have had some dry weather during their production season, but now as they get into harvest, they're actually having some rainfall, and so the rainfall is raising some concerns about quality issues. So some of the milling wheat that we had expected to come out of the Australian market may slip into the feed category, which I do think will open the doors for some more export opportunities for U.S. grains.
You look at corn, wheat, soybeans, violent start to the week this week, and now it's kind of cooled off. But do you look at it now and say that in all three commodities there, the high is passed?
I guess in my viewpoint, I think the high, at least on the futures side, the high has been reached at least for a while. And the reason I say that is, you know, we had the really rapid run up this summer as drought conditions continue to develop and expand and worsen. There was a couple things going on. First, there was this risk factor that was built into the market saying, well, we're not really sure how bad the conditions are, and we're getting more information now about what actual yields are coming out to be, and they're a little bit better than we had expected. The other thing, as we got into the rationing mode of the marketplace, high prices are expected to try and ration use, and we've already seen some of the use cut back. Some of the end users are shifting to other sources. They're actually using less than we had expected. So I do, as we look forward in time, I think we're going to see, there's still some uncertainty in the market, obviously, but I do think that we have seen the highs in the market for at least for the next several months.
We know soybeans are tied directly to South America, but corn and wheat, where are the movers there? I mean, what affects that?
Well, I guess short term, it looks as though we're in a fairly narrow trading range now that's developed for both corn and wheat. Wheat's been in that trading range a little bit longer than corn has. Some of the shocks to the system as we look forward in time, a couple of them obviously comes outside of agriculture in the form of continuing economic concerns and budget problems in Europe, but also obviously the developing story here with domestic, the domestic problems we're having with our debt issue and the fiscal cliff that everybody's talking about. And those will have an impact on the crop markets if they turn in a very negative sense.